Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, Suprajit Engineering is on our radar. Company delivered a mixed second quarter. The stock is down over 20% this year so far. Note that brokerage Nirmal Bangsi's strong order book and price hikes supported its quarter two performance. To discuss this and the outlook going forward as well, we are now joined by Ajith Kumar Rai, who's the founder and chairman at the company. Mr. Rai, good afternoon. Thanks a lot for joining us. Always a pleasure speaking with you. Well, quarter two is done. Now we are into quarter three and almost halfway through as well. Can you tell us what have demand trends been like and the margin compression that we saw in quarter two? Are you seeing some sort of improvement there as well?
Good afternoon, and thank you for having me on your channel. The first half results are behind us. Actually, we had a very good growth of nearly 28% on standalone, as well as nearly 60% on the consolidated basis, thanks to the LDC acquisition. In terms of the order book, I would say that the order book continues to be strong. Now, first half has been a strong growth for us. Within the automotive basket, the two-wheelers are having some headwinds, whereas passenger vehicles and light commercial vehicles, as well as heavy commercial vehicles, are all showing good traction. The aftermarket is very strong. We have had a very good first half, and we expect that to continue for the second half as well. The second half outlook for the automotive industry within India is pretty strong as well. Although two-wheeler may have some headwinds, but overall we see that this would be a good second half. On the global front, I think the OEM business is somewhat under stress thanks to various reasons: China lockdowns and China slowdowns, Europe war, North American component issues. There are multiple issues are there in terms of the global business. However, LDC has had a good quarter and continues to have a strong growth options. Along with Suprajit Automotive and Suprajit Europe, our original two entities which were doing export markets for global automotive side, has done pretty well and continues to have a strong market. In terms of the margins, our guidance has been that on a consolidated basis, without of course LDC, was between 14 to 16%. The first half we have done about 14%, and we are within our guidance in terms of the margin performance. Although on a consolidated basis with the LDC, it has come down a little bit because LDC is undergoing the usual restructuring and cleaning up that happens in any new acquisitions in the first year.
Okay, so you've also cut down guidance for LDC. Let's talk about that by 5 to 7% this time around. By when do you plan? When do you think you will see recovery here, and what is going wrong here? Like, what led to this revenue guidance cut for you?
Basically, LDC operates in Europe, US, and Chinese markets, and we know very well global automotive markets are down. US and Europe will have a negative numbers in terms of the overall production for various reasons. I mean, there are chip shortage issues, there is a war issues, there is economic stress in both the places. Whereas in China, there is obviously been slowing down thanks to COVID restrictions and other issues that is taking place in that country. So these are the three major markets where we operate under LDC. The second very important point is, despite these headwinds, our underlying business has been strong. In the reporting currencies, we'll continue to do what we have said in the beginning. But however, whether it is Chinese yuan or Hungarian forint or Mexican pesos and in euros, they've all depreciated in terms of currencies by 10 to 30%. So in a reporting currencies, we have taken as dollar. So, but the underlying business remains strong. And because of the conversion from a weaker currency to dollar, when we are reporting, we said that it will, come down a little bit. It is not really what I would say reflection on the underlying performance of this business.
Okay, so what could be the consolidated margins, including LDC? You gave us a margin guidance X of LDC at 14 to 16%.
Yes.
So what will it be including?
As I said, our guidance to the market has been X LDC. LDC has been just acquired. So it will take a year to stabilize in LDC. For this year, we have said we will be probably basically at LDC a margin neutral, whereas next year we should be in the positive ground. So considering that LDC is about 30-35% of our business, for next year we'll certainly be in the, even on the consolidated basis, we'll be in the double digits. For the first half of the year, we have been at a 10% EBITDA margin, including LDC.
So that is about margin outlook, including LDC and without LDC as well. Let's talk about your Phoenix Lamps division as well, Mr. Rai, because you've guided for improvement in margins beginning third quarter of FY23. What will this be led by? Are you taking price hikes? Because you did speak about sharp uptick in input costs. Are those coming down? And what is the margin improvement that you're looking at? If you can give it to us in quantitative terms.
In terms of Phoenix Lamps division, there are two issues. One, of course, is domestic market and the outside of India market, which is basically our two subsidiaries out of Europe. Now, in terms of India market, we have been able to pass on decent price increases and, not up to our expectation probably. But the major problem has been the precious gases, which has sort of shot up by something like 40 to 50 times in the last 1 year. Again, thanks to the war in the Europe, from where most of these gases originate from. So that had affected, it was not very difficult to pass on. So our margins had come down, and we had guided that also that there has been a lot of demand supply issues. The supplies have been more than the demand, and there is going to be a situation where margins will be under stress for some time. So in the last 2 quarters, we have seen the bottom of these margin pressures. And in this quarter, we have also guided that we will start improving the margin. It is a process. I don't think it will jump up in 1 quarter. I think we have been at about 4-5% EBITDA margin in the last quarter, if you really look at it, on a consolidated basis within PLD. That will probably, up by a couple of percentage points in this quarter. And I'm sure it will further improve as we continue to consolidate our business. We have also said in our business update that we are consolidating and restructuring a part of our business to make sure that we further improve the margin. So I would say next year we'll also go there to double digit in PLD as well.
Okay, so Phoenix Lamps division's margins will improve to double digit in FY24 versus the current levels of 4 to 5% as the entire transition and the turnaround that you are planning gets completed. Can you talk about your non-automotive business? That's also grown pretty well in Q2, up 25%. What's driving it? Is it sustainable?
Yes, I think, again, our non-automotive business has strengthened in the last quarters. We have been able to, one of the good things about this LDC acquisition, that LDC also has got a strong non-automotive business and a strong engineering and business development group. Now, together, between our own, Westcon as well as the LDC division, we are now becoming a very strong player in the non-automotive business. In this business, I have always said in various channels that the consolidation of suppliers will happen, and the strong will become stronger, and who have the right, product mix as well as the footprint will get more business. I think that's what is happening in the non-automotive business. We continue to garner new businesses. Of course, again, I must add here, the global headwinds exist and they persist. Despite that, we are winning new contracts and we will continue to grow that business.
All right. Okay, Mr. Rai, thank you so much for joining us and outlining what's happening in different segments, in different geographies, and what the outlook for the business as well is. That's the word coming in from Suprajit Engineering. For now, we'll slip into a break. On the other side, we'll focus on Viatech Wabag in a special segment, Mid-Cap Spotlight.